Hey guys, so in today's video, I wanted to talk to you about this morning's ICT Judas swing trade. Now the reason why I wanted to talk about this trade today is because it was an interesting one, because we actually had two fair value gaps. We had one right here and we had one right here after the market structure shift that happened right there, right? So because we had two fair value gaps, a lot of you guys have been asking me which one do you pick and how do you know which is the right one? So I just wanted to share this with you today because, as you can see, I took both. So I took the first one, which ended up going 2.5% into profit and then taking me out of break even. And then I took the second one, which actually netted me an entire 6% overall of my trading, right? So just wanted to make this quick video to break down this trade today so you guys can have a better understanding of why trading with a mechanical strategy is the best thing to do, because that way, whether it's a win, a loss, or a break even, it will not affect you because you're such a mechanical trader, right? So let's get into it, guys. Let's go over to the tick sheet, and the first thing that we need to do is identify our directional bias, right? So as you guys are aware, I posted a video yesterday and I said that I actually didn't take any trades yesterday. So if we go back and check it here, yesterday, I was waiting for sells because for me, the directional bias was bearish. So I was looking for sells. However, we never got those yesterday. Since then, if we go up to a higher time frame, we'll be able to see that for me, we've now had that break of structure to the upside indicating a bullish market, right? So now for me this morning, when I came into the markets, I was actually then looking for buys, right? Which is the entire reason I took this trade. So let me get everything off the screen so that we can get into this breakdown, right? So the first thing I did when I woke up was first identify my directional bias. So now I know that I'm looking for buys. Okay. Next thing, again, as we all know, the Judas swing will happen at the end of the Asian session. So we want to mark out the Asia high and low, and then we're waiting for a market structure shift after a sweep of the high or the low, and that's what we're going to do now. So I woke up this morning, I saw this, and instantly I was like, here we go. We've got our highs and lows right here. Let me mark those out. Boom. So another thing that you do want to be aware of, right, is when you are looking at the higher time frame, you want to identify potential spots that price can reach into before doing a market structure shift, right? So for me, I personally had this marked up. This was liquidity, and I wanted price to actually come sweep this trade down into this area before then doing a market structure shift somewhere on the lower time frames and creating higher prices, right? So that was the bias that I had. However, the other thing you have to remember is you do not chase the markets. You let the markets come to you. And when the markets show you a trade setup, you don't force it. You can't force a trade on the market. You just have to take what the markets give you. And I'll show you that in a second because you'll understand what I'm talking about. But let's just quickly tick this off because now we are waiting for a market structure shift. So let's drop down to our time frame. And okay, where are we? I've pressed price on too far forward. Right, here we go. So this is what I was seeing when I woke up this morning. Really and truly, I wake up at around 7. So this is the price action that I had seen so far, but I won't make you sit through this up until here. But nonetheless, let's get into it. So this is what I saw. Here is price, and now we're waiting for a market structure shift after we get a sweep of either the high or the low. Right, so this is what I mean about being a mechanical trader, right? Here we have the sweep. So now that we've got our sweep, now we're essentially just waiting for a market structure shift. So for me, this is our high and this is our low. So I want price to break this, come back down into a fair value gap and take price higher, right? So that's what we're looking for. However, some of you might say that this isn't a big enough sweep. But that's not what it is. You have to remember that a sweep is a sweep, Regardless of how big it is, it could be all the way down here, or it could be a little one just like this. At the end of the day, it's still a sweep. So as soon as we've got that sweep, now we wait for our market structure shift, right? So now we're waiting, and we get this crazy price action, which then actually goes and takes out this high. So now that we've taken out this high, now we know we are now in a bearish market, a bullish market, my bad. So now we've had price come down. It should have created a lower high before creating a lower low, but instead price has come down, created a lower low. Instead of creating a higher high, it's created a higher high. So now we wait for price to return to create a higher low somewhere before creating another higher high, right? So now that's what we're waiting for, and this is where a lot of you guys had questions today. I had a lot of DMs and everyone was asking me, what fair value gap do you choose? So for me, I had two marked up. I had this one right here, and I also had this one right here. Right. If there's anyone out there that's telling you that they know the correct fair value gap, they are chatting rubbish, right? Not one person knows what the correct fair value gap is going to be. Nobody knows if price is going to come here and go, if price is going to come here and go, or if price is going to do a backflip and come out the charts and into your bedroom. Nobody knows what's going to happen, right? So in instances like this, all you have to do is simply be a mechanical trader. You're going to set your entry here with your stops below. If price comes down, tags you in and takes you to your take profit, hooray. If price comes down and hits your stop loss and takes you out, oh well. You're then going to set this as your next entry, stop loss right here. Then you're going to wait for price to tag you in and take you to your TP or take you to your stop loss. Regardless of what happens, it's just a numbers game. You're going to take an entry here, you're going to take an entry here. If you wanted, you could only take an entry here and forget about this. Or you could just take the entry at the extreme and forget about this. But if price taps in here and misses you out, you're going to cry and complain, right? If it takes you out here and takes you out here, you're still going to cry and complain. So that is the beauty of being a mechanical trader. You don't have to worry about identifying the correct and the most perfect fair value gap. All you have to do is follow your rules. So next we identify the fair value gap and we set a limit order. So all I did this morning is I came to my charts, I marked all of this out, and I thought, yep, I'm going to get in here with my stop here, right below this low. And I thought if price tags me in, hooray. I'm going to put my targets up here. That's what I did. And then I let price play. Price came down, tagged me in, and it did shoot up. It went crazy, right? Went up here, and at this point I was up around $2,500. And I thought, you know what? Just for the sake of it, just because there's two fair value gaps, let me put my stop loss in profit. Because I don't know if price is going to come back for this. I don't know if price is going to leave me. But to be safe, I put my stop loss into profit to see what happens, right? Price came back. It hit my stop loss right there. Took me out of the trade. And then it came back down a little while later and actually went and chased the stop loss, right? So my break even got hit. So on that trade, let me bring that back up for you. This was my first trade and I was out for $200 and I took a $175 charge. So I was up about $25, but that was a break even trade, right? Even though price went all the way up here, I just moved to break even because I knew there are two fair value gaps. You don't know which one is going to be the one that makes you money. You don't know which one's going to get hit. You don't know which one's going to hit your stop loss. You don't know which one's going to hit your take profit. So what do? We be mechanical traders. So as soon as my break even got hit, I had my next position right here with stops right below, just there. And then again, I was simply targeting the opposing liquidity. Now this was the trade, 1 to 6 risk to reward. And once price tapped, it faffed around for a little bit and then it just went crazy. It came back down, but I hadn't moved my stops to break even because I knew this trade, there was nothing below it. So it was either going to hit my stop loss or it was going to hit my take profit. I'd already went break even here because I knew that I had a potential entry below. So once I had been break even there, I didn't go break even on this trade, and I just wanted either a stop loss or a take profit. And this trade was held for majority of the day, just like most of these trades are. But look at that. Perfect. Absolutely pinpoint perfection. And again, let me bring that back up for you. My stop loss or my take profit was at 1.05290, and that was literally right there. Right, that's where I got taken out. Netted me $5,950, and that was a 6% gain on my account. And that just goes to show, like I said, you can have multiple fair value gaps. If you're somebody who trades order blocks, you can have multiple order blocks. But I can guarantee you there's not one single person on the face of this earth that's going to sit there and tell you that they know what the correct fair value gap or order block is, because nobody knows, right? Not one person knows which one is the right one. So all we're here to do is we are here to be mechanical traders, to take the trade following your checklist, to make sure that every single trade you take has all the confluence it needs, because that makes it a perfect trade. And once you're in that trade, you're either waiting for a stop loss, a break even, or a take profit. We don't care about the monetary value. All we care about is the numbers. Does it win? Does it lose? If it loses, on to the next. If it wins, on to the next. We're not euphoric. We're not going to get excited just because we made a little bit of money. All we're going to do is get our bag and keep it stepping. It was great making this video. I love this trade today because it was so beautiful. It showed the power of having two different fair value gaps and not knowing which is the correct one. So I hope you guys enjoyed it. If you do have any questions, please feel free to go down in the description, hit the link to join my Telegram and send me a DM. But apart from that, guys, I hope you enjoyed it. Please don't forget to like, comment and subscribe, and I'll catch you guys in the next video. Take care.